Investor A, dumb money. Dumb money is shit scared, sells all of his or her shares off and says, the stock market, it sucks. I don't want to invest in this thing again. Let's look at the other person here, right? This person sees, now they're in the market, now they see the market retreating, pulling back, right? All this selling is happening. Now in their mind, they're thinking, oh my God, tremendous opportunity here. Hey guys, Omar Khan here with Theta Trading. Just wanted to welcome you guys. I want to talk about an interesting topic today. Before we do that, I want to please ask you to like, subscribe, and click on that bell icon. Now, I want to get a simple topic today, and that is the psychology of investing. How do we think? How do we create long-term wealth? How do we navigate difficult markets like the one we're experiencing now? Now, this is not the first time this has happened. This is not the last time it's going to happen. So if you're investing in the market, this is something you simply got to get used to, right? Or you say, look, this is not for me. It is going to happen, and it's going to happen over and over again. So you have to ask yourself, am I okay with this? If I am, how do I change my mind? How do I train my mind to think differently? Well, here's what you have to do, okay? So here's what we do here at Theta, all right? So what we do here at Theta is pretty simple. We invest in 10 to 15 stocks, in roughly 10 to 15 stocks, okay? So in a basket of high-quality stocks. Now, these are all stocks that we've done our homework on. We know their earnings per share. We know what sort of industry they're in, how fast they're growing, what their management teams are, what new products they may have down the road. We know everything about these companies. We know when their earnings are. We know their dividend dates. We know everything about them. Okay, and now that also gives us a high degree of level of comfort. Okay, now, so for example, if I'm investing in a company, let's call it whatever, Microsoft, just for the sake of argument, okay? And I know what earnings per share on Microsoft, I know what the PE ratio, and I know what the forward PE ratio. These are just kind of like simple valuation metrics, right? And I've done my homework already, okay? So then I have to look at it a certain way. These market pullbacks can and will happen again in the future. It is just that simple. So if this freaks you out and like, oh, I can't handle this, then the stock market is not the place for you. Either that or you got to train your mind to think differently, okay? So let's say, for example, Microsoft's at 240. Great. Okay, it's at 240, goes down to 235, goes down to 230, goes down to 225. Now, some people, that will be panic for them. Oh my God, it's going down. What do I do? I'm stressed out, okay? That is not the way you became a successful long-term investor. The way you become a successful long-term investor is to retrain your mind, okay? And what do I mean by retrain your mind? There's a famous saying by Warren Buffett, and it can be really applied easily to what we're discussing here in the stock market, what's going on now, okay? That line is, when others are fearful, be greedy. And when others are greedy, be fearful, okay? Simple as that. So right now the market's pulling back, okay? And you've done your homework on these companies. You know, let's just say Microsoft, Apple, Amazon, whatever it might be. We're not here to tell you what stocks to pick. That is your decision. I'll just tell you what the stocks that we look after are stocks that we believe in, companies that we believe in, that we believe a long-term appreciation potential. And why? Is because we've done our homework. We know we have an idea what the earnings per share is, or earnings in general. We believe we know what their growth rates are, what segments of new business they're trying to get to. Tesla's a pretty good example of that right now. Okay, so now we've done our homework, okay? Market pulls back. Two types of people. First type of person says, oh my God, what do I do? Market's pulling back. I'm gonna sell my stuff for a loss. I can't take this anymore. Uh-oh. That is called, and I don't mean to sound condescending, and I'm not. It's just a simple street terminology. It's called dumb money, okay? And why is it called dumb money? Why does the industry, why does Wall Street call this dumb money? Well, they call it dumb money because, first of all, they don't know why they got in the position. They don't know what the hell they're doing in the first place. And secondly, when the markets pull back, they get terrified and they sell their positions off at a loss. That's dumb money. Now, what is smart money? Smart money is the one that says, hey, I know what this company's worth. This company's worth X amount of dollars, okay? I know what it's worth. I'm going to pick up shares here real cheap because now everyone's selling, okay? And how does this vicious, nasty cycle of selling work? Okay, now, this is how the selling works in the market, okay? And why selling begets more selling. And this is the reason why you can get tremendous amounts of opportunity from time to time in the market, okay? Now, this is how selling begets more selling, okay? So markets go up, 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 and they just keep going up like they have the last few months, and then everyone is giddy. And what does that mean? Everyone is greedy. When everyone is greedy, what is our job? Be fearful. Okay, so markets are going up, 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 up. And what happens is people tend to margin themselves. They tend to get more and more into margin, start using margin. Now, for those of you who are not familiar, what margin is, it's simple. When you open up a trading account, a margin account, let's say, for example, you deposit $100 in there. Well, that brokerage will let you agree to buy more stock or own more stock than you have money for. Here in Canada, it's roughly 3.3 times. In other countries, it's slightly more. Like in the United States, it can be higher. Now, what we do here at Theta is we don't agree to buy more stock than we have money for. And if we do it, we're very, very careful with margin usage. Okay. So markets go up, people get more and more confident because we have this mentality that you know, if things keep going this way, we just keep kind of extrapolate outwards and think they'll always go this way. That is not how they work, right? Just because they've gone in a direction for a while does not mean they'll continue to go in that direction. So if the market keeps going up, it will not keep going up forever. That's not possible. The market always pulls back. Okay. So what happens? The market goes up, 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 and people leverage themselves more, more, more. And then you have a simple catalyst. Something could be simple. Like what's happened recently is the 10-year treasury yield has gone up. And why? Who cares about 10-year treasury? You're like, what's that got to do with me? I invest in the stock market. The hell do I care about what the 10-year treasury yield is doing? Well, here's why it's important to you and important to us. Well, 10-year treasury yield goes up. That kind of, you know, that means the bond market is getting worried about inflation, right? When it's getting worried about inflation, that means possible interest rate hikes, okay? So now, whether that comes to fruition or not, now Jerome Powell has said there's not going to be any interest rate hikes for quite some time, probably at the end of that 2023. So the bond market could be a little bit false. We don't know. But what happened is this has really spooked up the stock market, right? So the market's gone up, 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 up. And then something like this. The higher it goes, by the way, the easier the catalyst could be to spook it up. So the market goes up. Something spooks it like it has right now. Bam, done. Market goes down, okay? Now, dumb money gets freaked out. They get panicked. They get margin called because they're so heavily leveraged, and now they're forced to sell their positions at an inopportune time at massive losses. Next people that walk in is short sellers. So they start selling the market short. So not only do you have margin calls, you have short sellers coming there, which exacerbates the selling even more, okay? And then you have another group of people who are in there the whole time, which is algorithmic or computerized selling, right? They'll look at the markets and they'll look at how much leverage there is, and they'll start selling even more. And that creates an immense amount of selling pressure, okay? Now, if you're fully leveraged and you don't know what the hell you're buying, you're going to be shit scared, right? Now, think of the other way, right? Think if you're not highly margined. Think if you're just playing with money that you have, right? You fully believe in every company that you're investing in. And I mean fully believe it. You've done your homework. You know what these companies are worth. Not for certain, but you have a general idea. You believe in them. There is that conviction of belief, right? You cannot replace that. So now let's look at investor A, dumb money. Dumb money is shit scared, sells all of his or her shares off and says, fuck the stock market. It sucks. I don't want to invest in this thing again. My buddy told me to buy weed stocks. I got fully leveraged them. I don't even know why I bought them. Markets pull back. You say the stock market sucks. That's one way of doing things, okay? Let's look at the other person here, right? This person sees, now they're in the market. Now they see the market retreating, pulling back, right? All the selling is happening. Now in their mind, they're thinking, oh my God, tremendous opportunity here. Why? The difference is between those two investors, investor A, dumb money, highly leveraged on assets that they don't understand nor believe in. So when the markets pull back, shit scared, right? Who wants to be shit scared and sleeping poorly at night? Nobody. That's dumb money, okay? Smart money waits for that dumb money to sell all their shares off cheap, waits for the market to decline in price because they have a longer term viewpoint. They're not looking for today, tomorrow, a week from now. They're looking way ahead. What is this stock going to be worth a year, 3 years, 5 years? Now that person comes in as the market's pulling down and they start buying and they start buying and they start buying, right? The further the market goes down, in fact, the more they start buying. Because the old saying in the market, correct me if I'm wrong, is buy low, sell high. But because of psychology, because of the way we think, when the markets pull back, we don't think this way. It scares the shit out of us because we look at CNBC and there's some talking head. They're talking a bunch of shit about how the market's going to go down to zero when they don't know. There's a decent chance they don't know their head from their ass. Okay. I don't even know why some of these people are allowed on TV. It's unbelievable to me how they're even allowed to be on TV. Right. But what it does do is it stirs controversy when you say stupid shit on TV. Right. Like, oh, the market's going down 30, 40, 50%. Well, that's controversial, and it puts your eyeballs on their screen. That's their job. So take things that are said with a grain of salt. You know one thing that does not lie in the long run? Earnings. Okay? So in the market, short term, the market is a popularity contest. Means it can go in any direction, right? You just don't know. Month, 2 months, 3 months, you don't know where that's going. It could go anywhere. And for whatever reason. But the difference is long run. What is rewarded by the market? That is quality earnings. And this is why it is so vital to not only believe, but to truly understand the businesses that you are investing in, okay? So if I truly understand Apple, let's say reported, earnings per share of $1.68 per share last quarter. Let's forget what all that means and stuff. What does it mean to me? Well, if it means I extrapolate it out, and I look at forward earnings, to me, Apple's trading fairly cheap. Now, I don't want to get into all the valuation metrics, but in my opinion, trading pretty cheap. So when the markets pull back and that dumb money is selling, and scared shitless, what am I doing? Right? I'm picking up those shares cheap, and so is other smart money. And that is the difference between dumb money and smart money. And the only difference between those two things is one is greed because they keep margining themselves up over and over again. And the second most important thing is the fundamental belief in the asset that you are investing in. If you don't believe in a company, because when you're buying stock, what are you buying? You're buying a sliver of that company. You're a partner in it, shall we say, right? You're a co-owner. If I own one share of Apple, I can walk around saying, I'm a co-owner of that company. It's true, I am. Okay? And so are you if you own shares in Apple. But people don't think that way, right? So when the markets pull back, what am I going to do? If I believe in this company, if I believe in its long-term viability, what am I going to do? Am I going to get shit scared and say, oh my God, what do I do? I have to sell all my shares at a loss? I'll wait for it to come back because some guy on CNBC said so? No. I'm going to say, I know where this company is going because I know what their earnings are. I know what their products are. I know what their management team is. I know how good their management team is, excuse me. So smart money uses market pullbacks as opportunity. Dumb money sees market pullbacks as fear. You have to change the way you think. And the minute you make that change, where you view pullbacks as moments of opportunity or times of opportunity as opposed to times of fear, the minute that change occurs in your mind, the whole game will change. It's like turning into Neo from the fucking Matrix all of a sudden. Now all of a sudden you're dodging bullets because you get the game. But before, when you didn't get the game, every time a pullback happens, it terrifies you, it scares you. That's the change we have to make, right? And that is something you have to condition yourself to over a period of time. The only way you will get there, okay, is A, that you have a fundamental belief in the companies that you own, okay, the stocks that you own. If your buddy told you to buy some weed stock, that is not research, okay? Now, if you've got an investment group or you're part of a community and you guys analyze stocks and you have a good idea as to what they'll be worth in the future, and of course we could all be wrong, right? Of course you can be wrong. But you've done your homework. So when that pullback occurs, you become opportunistic, not fearful. And that goes back to the Warren Buffett saying, when others are fearful, be greedy. And when others are greedy, be fearful. So right now the market's pulling back. There's tons of greed. What are we going to do? Right? Sorry, tons of fear. What are we going to do? We're going to be greedy. And the minute you change your mind, but the only way you can be greedy when the markets pull back, when others are fearful, if you truly believe in what you are investing in. Without that, there is nothing. Okay? So if you don't believe in what you're investing and thoroughly understand the companies that you're investing in, you're never going to have that level of confidence. And without that level of confidence, it's going to be very difficult to be a long-term investor who's able to crank out some pretty good returns. So anyways, guys, that's the difference between, and again, I don't mean to sound condescending. It's not my terms. I don't know. I can assure you, I've been dumb money before in my life. I've been trading 23 years. I taught myself how to invest and to trade along with my friend Matthew, and we're both co-owners of Theta Trading. And we taught ourselves, and we've gone through. We've been dumb money, right? And I know the difference between dumb money and smart money because it takes a long time to figure this stuff out. I hope you guys don't make the same mistakes we made. That's why we started this company, so that people don't have to go through that learning curve. It's tough, So the minute you make that change, and turn into an opportunistic person, or an opportunistic investor when markets pull back, all else being equal, of course, and you go from being fearful to opportunistic. The minute you make that change in your mind, the whole game changes. I hope you guys take the time to understand the markets, to learn and to invest the right way over a long period of time, because when you do, it's a beautiful thing. And the cool thing with knowledge is nobody in this world can take away what is inside your head. And that's a great place to be. Anyways, guys, thanks for joining us. I hope we provided some good insight here on dumb money versus smart money. Again, this is not my terms. I apologize if anyone's offended by that. These are not our terms. These are just simple industry terms, and you have to know the difference between the two and how to be smart money and not dumb money. All right? We'll see you guys here soon, and thanks for joining us here at Theta Trading. Talk soon, guys. Take care. Bye.